Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So, I haven't really had to talk about volatility or hedges in a little while, huh? Kind of a quiet, well, more quiet environment than beginning of October, right? Beginning of August. Kind of like the headlines have receded a little bit, so haven't really had much. Haven't really had much opportunity to talk about hedges, and maybe you look at that as a good thing. That's fine. A lot of people are like long only people, so market grinds higher. That's great for them. But I will say that once we get closer to the end of the year, and we've had some kind of historically volatile Januaries, right? It's probably not a bad idea as averages to start to grind higher today. I guess the reason I wanted to talk about it is because in the middle of the day we had trade headline. You can see, I mean, we just dropped like super fast on some volume. So just it seems like we have these constant reminders why the market's still really susceptible to any sort of trade headlines, and it's just, to me, it's like a constant reminder that hedges are important, right? Whether you're looking to hedge like a specific position, or maybe like a kind of like a little bit more of like a broad hedge. I think that they're important, and we talk about them during our option sessions, and I have done a bunch of videos on hedges in the past, so I'm not going to get into like all everything hedge related. I mean, if you're looking for like a coverage ratio, you can go back and check out a video I did a while ago. So there's if you're looking for more information than this video has about hedges, go back and check some of our option sessions. We spent a lot of time going over it. But really, what like the quick thing I wanted to like cover today was just time frames and like targets. Okay, so um, what I like to do, and what I'm sure you guys have kind of noticed, is I like to have hedges on SPY, Q. Sometimes it's UVXY, sometimes it's like other names like the utilities and the REITs and stuff like that. But for right now, I like to have put spreads, or sometimes just straight puts on the SPY and the QQQ, just kind of like broad hedges. All right, and for me, I like kind of like a 2 month window for these. All right, so uh, when the trade starts off, like that's kind of like the minimum. So 2 to 3 months, like that's kind of like the time frame when the hedge starts off that I want that hedge to be. Obviously, as the time wears on and the trade wears on, I mean, like that time frame is going to begin to narrow, and then once it gets close to expiration, it's really kind of like the 2 to 3 week from expiration is when I really want to start planning on rolling that hedge out. Okay, so when I put on a hedge, it's typically like 2 to 3 months out. So that's why like the most recent roll went from November out to January. All right, because it's like the 2 to 3 month window. That's really like the time frame that I like when it comes to hedges, and it's more it has to do with kind of like a blend of not having not paying too much and kind of like price you out of the hedge, and not like trying to like time it perfectly and have only like a really very narrow window, and then like to have like the hedge kind of not really provide any protection or provide any coverage because like the theta is like working against you, right? So I like that 2 to 3 month window, and then once it gets to 2 to 3 weeks from expiration, that's kind of the time that I'm looking to roll. All right. Now, in terms of targets, I kind of just it's a little bit less of an exact science, but I like to time it, or I like to line them up with kind of like the peaks to the peaks to like the valleys, the peaks to the troughs. All right, so um, you can see like over like the course of the last few years that whenever we've had like pullbacks, we've tended to like roll over and retest like the previous low. So there's obviously been exceptions to that, but when we rolled over in October, got down close to like the previous low from August. August we didn't quite get down to the May low, but then you can see, right? So when we pulled in March, and then how May and June lined up right with that March low. December was, a different beast on its own. But, you can see prior to that, right? Like when we finally broke in October, bounced, November hit, right? And then rolled over and held it again until we finally cracked, right? You can see kind of where I'm going with this, right? And then when October, like that initial move lower, right? Stopped right at the June, and then going back, it was like February and then to May, right? So you can see kind of what I mean when like typical pullbacks seem to almost be attracted to like the previous low, so like the previous pullback low. So what I like to do is kind of like line like the targets of the hedge up with basically like the peak. So it'd be like a break back below 300, and then like the bottom, so like high 80s. So in this case, it was like the spiders would be like 290. And again, like sometimes you can do it a little bit different. If you want like a higher delta position, you don't have to do spreads, or you can do something closer to the money. Like personally, like that's kind of how I line it up. So kind of like the peak, so it'd be like right around 300 down to like the valley, down to like the bottom, which would be down in like in this case you got the 200A above 290. So that's kind of lined up with the 300 to 290 level. All right, and then on the Qs. Similar idea, right? So it was like 195, right? So like the same time frame, so January 17th, and then be like 195. So that'd be like the top end of like the put spread, and then like the bottom would be like 185. So kind of line up with like the low from October. So that's kind of like the way I go about like lining up like the strikes on the hedges. And then again, it's like the 2 to 3 month window. So it's like I want like those positions about 2 to 3 months out once they're initiated, and then obviously once they're initiated, then they're going to start to that time window is going to start to deteriorate. But once initiated, it's like the 2 to 3 month window. All right. I won't get into like UVXY and like like the utilities and the REITs or anything like that, but just because we had another trade headline today, and as the rally keeps like grinding and grinding and grinding, you figure eventually we're due for some sort of pullback, whether it's a headline related or maybe we're just exhaustion related. It's probably coming at some point, so good idea to kind of revisit the idea. How I like to like line up my hedges, the time frames of the hedges, spiders and Qs. I'm sure everybody's familiar with those. Plus, like one of the benefits about those options is that they're very liquid, right? So like those are just like positions you can like have in place, right? And then like when things actually start moving, you could actually go with like shorter term stuff. So maybe even like weeklies or like 2 week options, right? So if you want to look at it like a much shorter term. So if like the spiders were to break below the 8 EMA here, you can see how critical of a level it's been during like this recent move higher. So if the spiders were to break below the 8 EMA, maybe you could try some short-term options too, like in addition to like the longer term, like the couple month hedge, right? You could try something short, more of like a timing trade though. So like whereas like the longer term put spread hedge will be like kind of coverage because say like I'm not trying to time this, I just want some protection in place in case we're to roll over. Well, then say like you say, okay, this is it. We're finally going to crack. If we lose the 8 EMA, then maybe we get hit, right? So then you could look at something shorter term, so maybe like a week or even like 2 weeks out, because you figure if it loses the 8 EMA, probably get like a pretty quick pullback into the 20, right? So that's kind of how I like to do it. Like a little bit of a longer term position just to have in place, and then sometimes like I'll try to like time the actual pullback. So if there's like a headline that creates it or like a technical move that creates it, then I'll do like short term stuff. So like week or like 2 weeks out. All right. Like I said, I've done a bunch of videos on hedges, and so if you want to go back and check those out, and then actually some of our option sessions we went into like hedges much more in depth. So you can go back and take a look at those too. But if you do have any questions, you can reach out. I'm happy to answer it or help whichever way I can. If you like these videos, if you like anything I talked about, if you're looking for option trade ideas, follow up with the link in the description of the video for more information on options to play. All right. Have a great night, and I'll talk to you all tomorrow.